This is Not Your Average Financial Podcast, episode 348, What Your Other Advisor Will Say. Hey, everybody, welcome to this week's episode. Hey, I'm going to cover some really important material today that may just change your outlook on your relationship with your existing financial professional, whoever you might be working with or thinking about working with. Whether it's an investment guru or a stock picker or a financial planner of any kind, when you come to them and you talk with them about some of these not so average financial strategies that you may have been hearing on this podcast over the years, I can actually predict what they're going to say. And I'm going to cover some of these, I think, shocking comments on today's episode. And even more so, I'm going to reveal the motivations beneath their comments. So, what am I really talking about? I'm talking about the other financial advisors, or even maybe your soon to be ex financial advisors. Now, we both know that when you have an oh so average investment advisor or a CPA, or even a friend or family member who toes the party line and wants you fully invested in Wall Street, it's hard for them to hear when you're leaving their party for the not so average revolution. Or maybe after listening to the last couple of episodes of our show, you've been possibly handing these episodes to your other advisor, and they were glad to build for you a knockoff version of the Bank on Yourself designed policies we talk about on this show. Yes, it's true. I know that anybody can listen to this show, and when we have an audience like we have, there's going to be some other financial professionals, insurance agents listening. And while it's fine, happy to have you, come one, come all, when your existing insurance agent finds out that you're looking for a true Bank on Yourself type policy, but you end up getting a knockoff version from them instead, and now you're ready to walk away, well, you know that they're going to give you some pushback. They're going to be upset with you. Now, first of all, it's completely normal for the investment broker or the insurance agent to want to try to keep your business, because when you leave him or her, that's going to be less in fees that they are going to collect. They're not going to be able to pull money out of your pocket anymore. And when big commissions are going to be lost, whether it's your 401k or IRA money or some other insurance product, and the commissions are going to be lost, you're definitely going to hear from the advisor who's going to try to help keep you paying into their product so they can keep getting paid. So, of course, there's going to be some motivation here. They're going to be motivated to give you a call when they get that notice from the financial institution that you're planning to transfer funds away from him or her and into a policy that now you can control. In fact, if you submit what's known as a replacement form to the old insurance company, the insurance company itself, the old one, the one that you're trying to move away from, has the right to hold your request hostage and not process it for up to 30 days while they try to get in touch with their agent who sold you the old phony Bank on Yourself knockoff brand, right? To try to help conserve your business. Conserving your business is really just fancy terminology for having the agent call you multiple times and try to resell you on why you have that fee-laden insurance product or that volatile, underperforming mutual fund that doesn't meet your needs anymore. So there's about to be some sweet talking in your future. Let's just say it that way. That's what I mean when I say I'm about to really predict what your ex-advisor will say. Now, I've seen these situations come up enough times in my time in this financial industry to really predict what they'll say and even give you as much of a heads up as possible if you're thinking about moving from an advisor to work with us and our team at Lake Growth Financial Services. And at the end, stay to the end, because I've got some really important questions you can ask your existing financial professional, whoever he or she might be, that will really lay bare their motivations and what kind of a financial plan you actually have. So stick with me to the end. Now, here are some things that I've heard other advisors say to try to get you to question or second guess your decision when you bring up the financial strategies that we've been discussing and your decision to maybe move your business elsewhere. For example, and I'm going to quote this, quote, "I have a similar product like that. Why don't you set up a meeting with me and I can show it to you?" End quote. No, you don't have a same product. You don't have a similar product. You might offer variable universal life insurance. You might have an indexed universal life policy. You might have stocks or stock accounts or index funds loaded up with fees and taxes with little or no guarantees associated with them, but you don't have the types of strategies and approaches and products that we have unless you too are a bank on yourself professional, and very few people are. There's just about 200 of us across the United States and Canada. So please listen all the way through episode 159. Toward the end of that episode, we give a checklist in episode 159, Why Work with a Bank on Yourself Professional, to get a checklist of all the different product requirements necessary to have a true bank on yourself type policy. Now, if your advisor is able to say yes to every single one of those without hesitation or fail, then go with it. But most of the time, I don't see that. The solutions that I put together for our clients, whether it's a bank on yourself type life insurance policy or a fixed index annuity, which gives folks guaranteed lifetime income, the guarantees are built right into the contract. In fact, the insurance contract has a guaranteed increase of your cash value, or in the case of an annuity, a guaranteed lifetime income. And I personally, Mark, will literally sign my name next to a guarantee on every single policy we put together for our clients. Now, you can imagine your existing financial advisor trying to think through whether or not he feels comfortable signing his name or her name next to a minimum guaranteed number on their stock market account that they put together for you. Would they be able to? Would they be able to give you a guarantee that you'd have X dollars at retirement or at any other point along the way? Okay, something to consider. Here's another quote I'll predict your other advisor might say, and I quote, "Hey, there are a bunch of hidden fees in that solution Mark and his team showed you. Come into my office and I'll show you something better." End quote. Definitely not true. Everything is disclosed from my office clearly before you sign up, before you put any money into the accounts that we set up for clients. There are so many disclosures in this industry, so much so that when applying for a policy, you have to have multiple signatures on various pages noting all of the expenses and the fees that are all included in your policy. And by the way, does your market based advisor have anywhere where he has to sign his name next to all of his fees or her fees? Go back and listen to episode 36 as we really dig deep into the costs and fees structure of typical assets under management, which is what most people have in their IRAs and 401ks. Primarily, the broker is trying to get you into their office. If they can get you, their client, so they think, into their office, then they have a really good chance of unwinding your decision to leave them. They'll punch holes in your logic, or at least attempt to, and they'll plant seeds of doubt. Okay, next quote. And I quote here, "Here's an article I found on the internet telling you why you shouldn't get into the strategies that Mark and his team set up for you." End quote. Okay, yeah. The truth is, there's something on the internet for and against just about everything you could possibly imagine. Whole communities of people for and against everything. Everything. There's a group of people out there who hate cuddly little puppies. There's another group of people who are pro burning down the rainforest, let's say. So there's definitely going to be articles for and against the bank on yourself strategy, and of course, fixed index annuities, strategies like that that we talk about on our podcast. The question is, where is your advice coming from? And the person who's giving you that advice, do they have your best interest at heart? So, those are just a few of the responses that maybe another advisor would have when they hear you're considering a not so average financial strategy. But what if it comes from somebody closer to you, maybe a friend or a neighbor, or even maybe a family member? Now, while they might not be financial professionals, I get it. They still hold a lot of sway over our lives. So let's look at some of the common concerns our loved ones might raise when we bring up not so average financial strategies like bank on yourself or the income maximization strategy or fixed index annuities. Here's a quote: "You don't want to get into one of those. The insurance company is just going to try to keep all your money when you die." End quote. Now, it sounds like from that quote that your neighbor or your expert uncle or whoever doesn't like the solution that I put together. Now, tell me, what about it and which types of life insurance or annuities does he not like? There are several hundred different designs and strategies of using insurance and annuities and contracts. I don't like all of them either. Believe me, very few of them actually meet all of my criteria. So, is it a variable annuity, a fixed index annuity, a variable life insurance policy, an indexed universal life insurance policy? Is it a return of premium policy? Is it a guaranteed second to die policy? The list goes on and on and on. So, what type specifically does your friend or uncle have a problem with? I'm an expert in all of these, but I only specialize in serving clients with a very few select products. So, if your family or neighbor's situation, I'd also be curious, is their situation just like yours? Do they have the same debt ratio, income, assets, retirement plans, and timeline to retirement? Are they exactly the same as you? Maybe what's wrong for your uncle or your neighbor is perfect for you. Okay, next quote. My kids said don't do it. Now I get this one a lot, but I have to be a little snarky here, okay? So I'd like to say, hey, out of curiosity, how old is the kid we're talking about? Oh, he's 27 years old? Okay. Well, maybe you're a quarter of a century older than him. You think maybe his situation might be coloring his opinion some. No doubt, he was interested in protecting mom and dad in this case. But is your child an expert in this? Does he or she have an informed opinion on the financial strategies that we've been discussing? Your child no doubt cares about you, but does he or she know as much as you know about your financial situation? And have your children done as much due diligence on Bank on Yourself or similar strategies as you've done? Since we've had several multi hour long discussions on your current situation, your children weren't there. They may not be as privy as I might be to your goals, dreams, concerns, and your specific financial situation. And oh, by the way, do you remember seeing that giant death benefit on one of the pages that we looked at together? Do you think maybe that death benefit would be a number that your children would be unwilling to accept if the worst should happen and an inheritance was paid out? Because if so, I have a few charities that I could recommend in lieu of your kids getting the inheritance. Now, I'm just being, of course, facetious here, but that might keep your kids interested in helping you move forward with a strategy that's in their best interest. Now, is it possible that your kid might think he or she knows more than they do in the area of finance? Think back to when you were 27 or whatever age your kid is. I know when I was about that age, I thought I knew everything. Boy, was I wrong. And with both a neighbor or your child or anyone else in the family who might be pressing their opinion on you, are they in a better financial situation than you are? And maybe more importantly, if they're really pushing their opinion on you, ask them, are they prepared to be financially involved in your financial life? Are they going to be there to help contribute to your financial retirement plan and strategy? People love to give opinions, but rarely are they ready to dump in some money. So, are they ready to get financially involved to put some money where their opinions are, where their mouth is? Okay, so that's enough about talking about what advisors and friends and family might say. What about what you feel after talking to your other advisor or friend or colleague or neighbor or kid? Oftentimes, it just leaves people more confused. And I know, I get it. It can be a fairly overwhelming experience, and you may just want to feel like you need to think about it. No problem, I say. Let's sit down. Let's go over everything again. Let's go back and review the entire financial strategy now that you've had a chance to hear from the Dave Ramsey knockoffs or the Susie Orman knockoffs, people who follow the oh so average financial advice. I'll even do a little pop quiz with clients. I want to make sure that they know what they're getting into. I'd hate to have any client I work with get into something they don't understand. But the truth is, thought takes that long. Tell me, in your heart of hearts, what is the misunderstanding? What's the doubt that the other advisor has planted into your mind? I've certainly heard it all before. And if somehow this other person, friend, advisor, whatever, has discovered some major flaw or problem in my plan or strategy, then I'd be happy to discuss that, make any changes necessary. And we've had several hundred clients that we'll have to call right away if this is all just some big hoax, right? Now, it's very likely, again, that the advisor will say that they just don't like Bank on Yourself or they don't like annuities. Good is my answer to that. The other advisor doesn't need to buy one. I'm not working with another person. I'm working with you. I'm dealing with your specific financial plan. And really, who are they motivated by? whose money is it that we're talking about? Is it your money or is it the other advisor's money? And while we're at it, what is the motivation behind the people who are influencing you? Are they like crabs in a bucket trying to pull you back down, back to their little bucket party when you're trying to escape? So remember, there are going to be pros and cons to every financial instrument. And oftentimes people who don't meet all of my requirements don't end up working with me. Now, this is why every single person I talk with, before we set up any sort of strategy or financial proposal, we'll build an extensive financial analysis. I usually end up writing about 12 pages worth of notes, conversation topics, areas to discuss to learn about their financial disposition. What are your things that you love and hate about your current financial situation? I get it. Nobody's got it all figured out. So my team and I try to learn the good, the bad, and the ugly of your current financial situation. It might be a Zoom call. It might be a telephone call where we're reviewing your account balances, your debt, your income, concerns, goals, upcoming expenses. It's all done in the no judgment zone. And my main purpose is to truly design the best strategy for you. We're going to learn all about your beliefs, about taxes, about the future of the market, risks if you should pass away too soon or even to live too long, so much more. We're building a strategy based on informed decisions, not just because we're here to sell some product and cut out of town like most of these other guys that are there to basically leave you stranded with how to manage your money while we collect your fees off your back. No, we're not like that. If you're looking to just buy a product and not have a financial advisor or strategic associate at your side, I'm not the right person for you. I'm not going to just run off. I'm going to be your coach, your guide to strategize to help you build a financial vehicle, not that just looks pretty in a garage, but can get you to your destination and enjoy it along for the ride. Now, another quote I hear some people say is, "Hey, my advisor says he doesn't like the insurance company you chose." Or they might say, "Hey, I can't find enough information about this product." If you truly want to see the statistics and financial backing of the insurance company, I typically say go to the insurance company's own website, click on their financial strength, or even better, go to the insurance commissioner's website in your state. You can read up on the insurance company and make sure that it's coming from a worthwhile source, not just somebody's blog out there who had an opinion or axe to grind on XYZ insurance company. Go to the insurance commissioner's own website in your state. So if you live in Idaho, the Idaho Department of Insurance typically will have a report on most of the insurance companies working in that state. All right, a lot of people on the internet are going to be leaving comments on Reddit or other places saying how terrible this company was and how such and such never paid out a death benefit when grandpa passed away. On occasion, this topic comes up in my discussions with people, but as I dig it further into it, they'll say, "Oh man, that old greedy insurance company never paid when grandpa died." But when I just ask a few questions, just trying to understand what happened, I just say, hey, insurance companies would be sued out of existence if they didn't keep their promises. So sometimes I'll even call the insurance company. And as it turns out, grandpa hadn't been paying his premiums. He'd been missing the premiums for the last, say, couple of years. And that's why the policy had lapsed and there was no death benefit paid out. Or it could be that it was a universal life policy and the cash value was just getting eaten away in the final years before grandpa passed away. 100% of the time so far, the insurance company did everything possible to keep their promises. That's literally their business model. So, as we wrap up here, something I found helpful now for several years is learning how to ask all the right questions of your previous or existing oh so average financial professional. What questions could you ask to make sure that you're getting the right kind of plan that you're looking for? So, here are a few questions. I would jot these down or take a look at them in the show notes if they're available there. So, ask your financial advisor if they'd be willing to answer these questions. Okay, so when or if you talk with other advisors, I recommend you ask these questions and send your answers to hello@nyafinancialpodcast.com. I might just read them in an upcoming episode, taking names and information and personal stuff out of it, of course. But there's so many great, let's just call them responses that I've heard from these questions. So here they are. Write these down and then see if your advisor is even willing to answer them. 1. Have you ever lost your client's money in the past? And if so, how can I be guaranteed you won't lose my money in the future? Can you put that guarantee in writing? Ooh, goosebumps already. All right, question number 2. Where do you think taxes are going in the future? Down or up? How will you protect me from taxation over my lifetime? I'm answering all these questions for my clients. Will this advisor, your other advisor, answer these for you? Question number 3. Can you know for certainty what the market will do over the next 40 years or even this year? Next question. What can you do to help me grow my net worth and my business if banks decide to reduce or take away my line of credit? It's a good one. That's going to happen over their lifetime, right? Next, what are your fees? And do you promise to eliminate them completely when you lose me money in the market? I have yet to hear someone say yes to that question. Next, what are you doing to completely protect me from market downturns? What are you doing to completely protect me from creditors if my business fails? What is your plan for me when I bring on equity partners and when I eventually sell my business? Okay, so those are the list of questions. I'd be happy to answer these questions in detail with each of you, and I'm excited and ready to help you in growing and protecting your wealth. But not every financial professional is an expert in the bank on yourself strategies that I work on with my clients. So if you'd like to discuss things further and be sure that you're talking with someone who knows the strategy of bank on yourself, let me know how I can help. I look forward to working with you. Reach out to us at nyafinancialpodcast.com. Click on request a meeting, and in the agenda notes, write other advisor, and I'll know what you're needing to talk with me about before we meet. So again, that's nyafinancialpodcast.com, and click on the request a meeting button and choose the phone introduction appointment. And then just tell me that you want to talk about the other advisor. All right, let's keep the conversation going, and thank you for joining me for this fun episode of Not Your Average Financial Podcast, helping you think and live differently with your money, your advisors, and your future.
This has been another episode of the Not Your Average Financial Podcast. To join the financial revolution and start thinking different about money, go to www.nyafinancialpodcast.com and click Request a Meeting.
The topic